Welcome to Calm Trader channel. Imagine waking up one morning, checking your phone and seeing a notification. You made a profit today. Intraday trading or buying and selling stocks within a single day. Sounds exciting, doesn't it? You have probably heard stories about traders who turn a small investment into big profits in a short time. But how does that really work? Is it luck? Is it magic? No, it's not. Intraday trading is a skill, one that can be learned, practiced, and mastered. And here is the best part, even if you are a beginner, it is possible to get started with just few simple steps. Today, we will break down exactly how you can start earning profits from intraday trading step by step. Ready to dive in? Let's start with the basics. What exactly is intraday trading? Well, intraday trading means buying and selling stocks within the same day. It is not about holding stocks for weeks or months like long-term investors. Instead, you are in and out of the market quickly, aiming to profit from short-term price changes. Imagine you are looking at a stock like ABC Limited. You notice that in the morning the stock is trading at 100 rupees. By midday, it climbs to 105 rupees. You think this might keep going up? So you buy 100 shares of ABC Limited for 100 rupees each. As the price hits 107 rupees in the afternoon, you decide to sell your shares for a profit of 7 rupees per share. That is 700 rupees profit in just a few hours. This is the essence of intraday trading, catching small but consistent price movements throughout the day. But here is the thing, it is not as easy as it sounds. The stock market is unpredictable and prices can change quickly. The key is knowing when to enter the market and when to exit. Now let's make this even clearer with an example you might relate to. Think of it like a game of basketball. You are watching the game closely and you can tell which player has the ball and is about to make a move. As the game goes on, you see some players are more aggressive and others are more cautious. You are not going to make your move at the same time as everyone else. You wait for that perfect moment when the player is wide open to make your shot. In intraday trading, that is your entry and exit strategy, you wait for the right moment when the stock is moving in your favor and then you make your move. The goal is not to aim for a massive win in one shot, but to capture smaller, more consistent gains. Now, to play the game, you need a right tools. First thing is first. You will need a trading account. This is like your playbook, where you buy and sell stocks. There are many platforms available for beginners. They are easy to use and often come with guides to help you along the way. Second, you will need real-time data. Stock prices don't stay the same. They are always changing. So having access to live data helps you spot when a stock is about to move. It's like tracking the game. You need to see the ball before it hits the basket. Lastly, be sure you have a demat account. This is where your stocks are held electronically, so you can buy, sell and store them safely. Now let's talk about the strategies that will help you play the game and win. Let's break it down into two main ones that work well for beginners. 1. Momentum trading. In this strategy, you are watching for stocks that are already showing a strong price movement. If you see a stock climbing from 100 to 110, it might keep going up. So you buy in early and sell before it peaks. It's like surfing. You catch the wave early and ride it as long as you can. But remember, the wave doesn't last forever, so you need to know when to get off. Breakout trading. Breakout trading happens when a stock price breaks through a significant price level, like a resistance level. Imagine a stock has been stuck at 100 for weeks, but suddenly it jumps to 105. You think, okay, the stock might just keep rising. So you jump in and ride that breakout wave, hoping to profit from the new upward momentum. Let's be honest, the stock market can be unpredictable, and while intraday trading has the potential for profits, it also comes with risks. The key to not losing more than you can afford is risk management. The most important tool you need is a stop loss. A stop loss is an order you set to sell a stock if its price drops to a certain point. For example, if you bought ABC Limited at 100, you might set a stop loss at 98. In that way, if the price starts to fall, you won't lose too much. It is like wearing a seatbelt when you are driving. It's not foolproof, but it helps keep you safe. Lastly, stay disciplined. If you make a profit, don't get greedy. If you make a loss, don't panic and start making risky decisions. The best traders know how to stay calm, stick to their plan, and avoid emotional decisions. So, to wrap it up, intraday trading is a skill, one that you can master with practice and right strategies. The key is to take small, consistent profits, learn from your mistakes, and keep improving over time. Remember, it's not about getting rich overnight, it's about steady growth, using the right tools, and managing your risks. If you are just starting, take it slow, experiment with virtual accounts, learn the basics, and once you are ready, trade with real money. But always be careful and start small. If you enjoyed this video and want to learn more about intraday trading, make sure to hit the like button, subscribe, and share this video with anyone who could use a little help getting started. Thanks for listening and good luck with your trading journey.